Welcome to Forex Investment Group. In this video, we are going to talk about trading the biggest currency, which is the US dollar. So we are not going to delve into trading the USD index per se, but how do we trade other pairs that has the US dollar in them? So basically, the USD index is actually an index that shows the strength of the US dollar against its other rivals. So basically, if we see the USD index giving us an upward trend or giving us a downward trend, we know that the US dollar is rising or is decreasing respectively. So basically, when we analyze the US dollar index, we can have an idea of how other pairs are going to behave. So for instance, if we go to the higher time frame of this particular index, this is what we see. When we count levels like what we always do on this particular channel, we can see that on the H4 time frame there has been a downward trend. How did I come up with that conclusion? We can see that we had a drop, another drop, and then this last drop. So basically we wanted to see some sort of a reset, and we said in our previous videos that we reach a reset using 3 levels of the preceding time frame. So in this particular case, we can see there was choppiness in these regions. This was end of this week up to the previous week to the time of recording this video. There was consolidation all over the place. However, with that in mind, we can see that from the bottom part or from the lowest price, there has been an impulse to the upside on the H4 time frame, like in this particular case. After this H4 level was issued to the upside, we had another H4 level to the upside again. So as I always say, when you are issued with 2 levels in one direction, usually there is possibility or high probability to have the last one. This comes or boils down to the fact that when we get a sequence of 2, 4, 6 and asked what's the next number, we can easily say 8 because we have been given a sequence. So in this particular case, we have been given 1, 2, what's the next move? The next move is likely to be 3. Right? So in this particular case, it means we had a reset point and another reset point. Marking those reset points will give us something that looks like this. Reset 1 and then reset 2 to the upside, which is this one. So this is actually telling us that the US dollar is likely to strengthen over a long period of time. As we always say, everything that we talk about is actually determined in terms of probabilities. This is what the structure is telling us. If we are going to talk of the advanced market structure, we can say this was a high, a low, another higher high, another higher low, and we are expecting to see the market structure give us the last impulse to the upside. So with that in mind, after analyzing the US dollar index, we now say what is happening on the other pairs. So the other pairs are those that have X against the US dollar or US dollar against X. In this particular case, we are just going to see we are just going to learn from Euro USD and USD CAD because they have different arrangement in terms of their quote and variable currency. So on Euro USD, I've already marked out the levels, but this is how it looks like. We have seen that on the USD index, we had 2 levels of the H4 time frame, and on this particular pair, we also have 2 levels of the H4 time frame. By levels, we are saying there is a drop, a lower high, drop, another lower high that has been created, just like what we have seen, but in this particular case it's an inverse of the USD index. Why? Because of the arrangement of euro being the best currency and USD being the variable currency. So that is why we are having an inverse flow of the US dollar index like what we've seen. So basically, Euro USD is usually directly in is actually inversely correlated to the US dollar index. So if we see the US dollar index rising, it means the Euro USD is going to drop, and if we see the US dollar index dropping, it means Euro USD is going to rise. So if we look at USD against CAD, this is how it looks like. On USD against CAD, this is what we can see. We can see that it has a probable completed cycle of the H4 time frame, unlike what we have seen on the USD index. So for the purposes of this lesson, we are saying in some cases the US dollar index is not directly correlated or inversely correlated, but at a percentage. We are saying in some cases we can say it's inversely correlated to this particular pair with 70% or 60%. So in this particular case, we can say USD CAD has already completed its cycle to the upside in terms of strengthening the US dollar, but on the USD index, it hasn't completed its cycle. So what do we do, or what happens? We have what we call fractional disparity, which is a factor of waiting for one another whilst we consolidate one pair. So if we have two pairs that are moving in one direction, but unfortunately one has already completed its move, the other one will need to wait for the other one, but whilst waiting, it will be consolidating, like in this scenario. So consolidation is whereby they will be actually accumulating contracts such that after the other pair has held or caught up with the other pair, they'll start to utilize those liquidity that has been accumulated. So in this particular case, we may see USD against Canadian dollar consolidating at one point whilst it waits for other pairs to complete their cycles. So, in recap, in this particular lesson, we were learning how to use the US dollar index. We should actually start by counting levels of the US dollar index before we jump to the other pairs. And after counting those levels, we now know the bias of the US dollar, and it will be wiser for us to have a little bit of the fundamentals behind the US dollar through websites like FX Street, so that we can learn what is affecting what numbers the jobless claims in terms of to determine if an NFP is going to be above board or below. We need to actually have those notes on our diary so that we can have an informed decision. Like in this particular case, a rise is actually imminent, because if we look at the fundamentals of the US dollar, we can see that last week the US dollar actually released hotter than expected GDP numbers, and it also registered through the reports that the interest rate cuts are not going to occur right away, but maybe later this year. So with those information tallying with the technicals, we will have something concrete to base on whatever bias that we have determined. So basically, we may see some consolidation before we go to the upside, and we should as well leave a probability that the market can do whatever it wants and it can actually go against us, but we just need to look for where the higher probability is. On that note, we've come to the end of our today's video. I'll see you in the next one, and have a blessed day.